Welcome to the BF Anderson Technical Report for November the 10th. Recently, actually yesterday, I had a lunch meeting with a client, and the client was discussing with me all the issues in the world today and how, this person actually watches the financial news probably a little too much, and all the opinions out there about what's going on with Trump and what's going on with North Korea and what's going on with Russia and blah, 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 blah. This never stops. There will always be some factor out there that people tend to focus on. So that's the beauty of trend following. Where trend following, you listen to the market. And so this is a quote from The Perfect Speculator, which is an excellent read, excellent book. It takes time for the market to establish a trend, and it takes time for that trend to be reversed. So if we just kind of look back here in this period here, 1983, as I've noted many times before, was after a breakout at 1,000 on the Dow. Now, this is the NASDAQ. I am making a mistake there. But anyway, for an extended period of time, the market went nowhere from 1966 to 1983, an extended period of time where there was no trend. But prior to that, from 1942 to 1966, there was an uptrend. So if you look at what happened when it broke out, we had a very established uptrend that lasted for many years. I mean, it went for quite a long ways. We'll look at another graph on this. But the point is that these trends last a whole lot longer than we realize. So if every time some negative thing pops up, now you're going to have these difficult periods. There's just no getting around it. So you have to realize that if you're going to get from point A to point B, you've got to discipline yourself to be able to deal with these issues. Now, if the trend reverses like it did here, and you have to realize the drop in the NASDAQ in 2000 was almost as much as the drop in the Dow Jones Industrials in 1929. In 1929, the Dow Jones Industrial Average dropped around 85%. Well, this drop here is around 80%. So we had a reversal of trend. You take defensive action and you deal with that, and then you have to survive to get to the next breakout and uptrend. Now, we just recently went through something like this. I mean, for the starting in mid-14, we went into a sideways situation. We had clients that or new clients that came in that saw us go up 70% in this area, came in, and then once we started getting these downdrafts or this correction, they quit. And most of them quit right here at this low right here. And if they just would have waited a little while longer, look what has happened. So the trend is your friend, and realize they last a lot longer than a lot of people give credit. So all I'm doing here now, and I want to make sure everybody understands this, I'm just connecting the highs and I'm connecting the lows. I'm not pushing the graph any certain way. So once you realize that this consolidation period has lasted approximately 16 years, where the market has gone nowhere for 16 years. So what happens during this type of thing is people lose interest in the stock market. And if you go back and study the 1960s, 1970s, that would have been a really good time, especially around 1974 when the Dow was at 500, would have been a good time to be accumulating shares of Walmart and McDonald's and Home Depot and IBM and all those kind of things. So what happens is you get into these sideways consolidations, and it just creates a tremendous amount of fuel that can fund an updraft. So you can see here that the breakout. So the prior consolidation from 66 to 83 was a 17-year uptrend. The uptrend from 1983 to 2000 was a 17-year uptrend. Now, we're of the opinion that this uptrend really didn't get started for growth stocks until this year. Now, I wanted to bring up the fact that we are seeing a lot of rotation in the market right now, and one of the areas that we're seeing strength in actually is crude oil. This is West Texas Intermediate Crude. Now, you can see that crude oil prices have broken out to the upside here after a long consolidation period. Now, this is a 2-year high at 54.50, and the next resistance is at 60. So we want to keep an eye on crude oil. Now, here's another graph just to kind of make the point. Crude oil got up to around 100, 110 then broke all the way down in early 16 to under $30 a barrel, and is now consolidating and now somewhat breaking out. Now, I want to make a really important point here. You don't want to run out and buy a bunch of energy stocks right now. You want to just really kind of be aware that maybe the low in oil has been put in, because this is our trusty old 10-20 month moving averages, the 10-month versus the 20-month, and we look for golden crosses and death crosses. Well, we got the death cross in oil right at $100 a barrel. We did tell clients, especially those heavy in Exxon and so forth, that maybe they should use a little bit of a defensive thought process when it comes to oil. We see the low. Now, we've gotten a golden cross, but I would not say that these moving averages are in a definite uptrend. But the price of the commodity is above the both moving averages, so these moving averages probably will turn up. We're keeping an eye on the energy stocks, but we're not seeing anything yet. Now, on to the top five. Alliant Technologies continues to be strong. They announced earnings, got a big earnings gap here. The stock is continuing to make new highs. Again, this is a company specializing in medical equipment for teeth, how to straighten teeth. This, again, is a biotech stock. It has, as you can see here, and overall the biotech stocks are really not looking that good. I mean, if you look at the biotech indexes, they don't look that good, but there's a lot of selected companies that are getting involved in cancer treatments and different types of treatments that are doing incredibly well. In fact, we have 2 biotechs in the top 5 this week. Now, another interesting thing, and this is also kind of relates to oil somewhat, is the solar stocks. Here's First Solar. This is an old favorite. We were heavily invested in First Solar back around 2005 through 2007. Now, First Solar is more involved in a specific type of solar technology that's kind of used on an industrial level. In other words, these big solar farms. So you can see here the stock, they announced earnings, the stock gapped up and has been making new highs, and I think it's something to keep an eye on. Now, here's Juno Therapeutics, another biotech. They are involved in CAR-T, which is a technology for cancer. Here is another interesting pharmaceutical. Now, they specialize in drugs for the central nervous system, and they also are coming out with drugs for things like schizophrenia and stuff like that. So you can see here that we're seeing a dramatic move here in this stock, and the pharmaceuticals and the biotechs continue to be strong. So basically, remember that you don't really want to try to get too hung up on opinions out there. You want to keep an eye on the trends. If we see that the trends are starting to weaken, we'll take defensive action. But I got to be frank with you, the only index that's showing weakness right now is the small cap index. Now, that might have something to do with the uncertainty about the tax legislation. But overall, most of the trends are positive. Don't fight the trend. Thank you very much, and call me if you need any help. Thank you.